It's 5 o'clock in London, it's midday in New York, 2 a.m. in Sydney, midnight in Hong Kong, 9 a.m. in San Francisco, and 9:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world. My name is Patrick L. Young, the IPO-VID livestream, Series 24, Episode 3. That in the aggregate makes Episode 141, starts here. Gosh, and let's look at the situation in Australia, which becomes curiouser and curiouser when we look at their technology or lack of it at the ASX. Once an exchange tech leader, now a haven for blame storming. The latest Australian report places blame on ASIC and RBA for the rampant upgrade failures of ASX and their chess system. Is it third time lucky for Lutnick? Howard is back with another slate of mega players backing him as he attempts to break down the CME USD yield curve monopoly. Will FMX work? Watch this space, and indeed, of course, watch this space in Exchange Invest Daily, the newsletter of the Bourse Business, to which you can sign up at exchangeinvest.com. It's mostly a same old elegy for the stillborn CMU, that's Capital Markets Union, something the European Union have been looking at for more than a decade, but still haven't managed to deliver. We've had Christian Noyer, the former boss of the Bank of France, has chaired a report. It has some interesting, sensible, reasonable advice. It also has, frankly, some dangerous remedies, including monopoly top-down markets, as seems to be the vogue amongst many in the European Union these days. In the same week, Enrico Letta, former Italian Prime Minister, he produced what was quite literally a love letter to markets, pleading for a better marketplace environment. That sounded more coherent to us. Meanwhile, as I speak, it's Judgment Day, ladies and gentlemen, for none other than CZ. Will he forfeit the judge? He is in Seattle as I speak and headed into court. If we hear anything more about his sentencing before this show is over, we will let you know. One man who's absolutely walking free and easy at the moment, because he certainly does not have any form of crime against him, unlike CZ of Binance fame, is our guest today, the magnificent Roland Bellegarde. We're going to be talking about modernizing Saudi markets and modernizing Tadawul, the Bourse of Saudi Arabia, to which we'll talk about in a moment. Let's introduce our guest. Roland Bellegarde was a Group EVP, Executive Vice President at Euronext and NYSE Euronext from 2000 to 2014. His many accomplishments include unifying the then four Euronext markets on one single order book and platform, which therefore, if I remember correctly, would have been what? Paris, Amsterdam, Brussels, Lisbon, or Porto, I think are the four markets we're talking about. He's going to contradict me in a moment. Nowadays, Roland is senior advisor to the group CEO of the Saudi Tadawul Group. That's the stock exchange of Saudi Arabia, ladies and gentlemen, actively participating in multiple projects, modernizing and developing the Saudi capital markets. He's currently a board member of the Saudi Exchange, the clearinghouse Muqassa, which was set up just a couple of years ago, the CSD, Edaa, and the innovation subsidiary, Wamid. Well, welcome to the show, Roland Bellegarde. It's lovely to see you. Where in the world are you today?
Well, thank you for having me. I'm in Saudi Arabia, in the 400 kilometers from the sea, in the desert, but in Riyadh, actually, which is the capital of Saudi Arabia, a very active city, very modern city, very Los Angeles style city. And this is a very, very important time, very nice to be part of all these changes taking place in the Middle East and especially in Saudi Arabia.
You know, it's funny, I think when I think about how Saudi Arabia is moving at the moment, it reminds me a little bit of, if you remember that Tintin book, when Tintin went to America and one night they discover oil and Tintin goes to bed in a tent and he wakes up the next morning and there's this thriving, pulsating megacity like Los Angeles has been built all around him. I mean, I appreciate the oil was discovered a little while earlier, but certainly things are moving and developing incredibly fast in Riyadh and Saudi Arabia, aren't they?
Yeah, and I think this is one of the key interesting elements is that there is a very strong alignment between the authorities, the kingdom from the top down is really aligned to do all these changes and actually willing to look for a longer-term view of what's going to happen and what should happen in a country which has been living on oil, which have obviously not really taking the steps to modernize the country until the last few years. So realizing that the oil is going to end in a way or another, and the mindset has to change beyond just changing the way the economy works. And it's quite, and I'm used to say to most of the visitors, realize it's not just about injecting money and having a capital market, just to claim that there is a large capital market, but it's about fundamentally changing the way the entrepreneurship works in this country. If you think about the whole Middle East, where countries have oil, most of the revenue, if not all the revenues of oil, go to the government. So the demand is coming from the government. When the government is willing to build schools, highways, any infrastructure, they just issue a request for proposal, and the providers are mostly a combination of the domestic and international party. You cannot provide the service or answer a request for proposal if you're not having a local partner. So this was the model where the economy was managed directly. The demand was managed directly by the oil and by the government, by the budget. So what does it bring? It brings the fact that you have a class of people which are the claimed entrepreneur, but actually they're just not anticipating any demand. They're not working in the capitalism that we know, which is taking a risk, anticipating a potential demand, not being sure that you will get that demand. So taking your risk, and may you succeed, you may fail. Here, there is no risk of failing. You're just failing of answering the request for proposal, not being selected. And so that's the way this economy in the region has been working for a long time. So if you're not having any more oil revenue, the budget will not be the source of the main demand, which means that the people have to change the way they're operating. They have to anticipate the demand. They have to take risk. And that's really the fundamental behind what they have named the Vision 2030, the objective of actually changing the economy. So it's not a short term. It's not I would say, a single man idea at a point in time that will change over a couple of years. It's a long process, which is really something very, very strong in that in pushing forward the economy.
It's a fascinating long-term agenda. And of course, also, we've got so many, these days, there are so many interesting playbooks to look at. I mean, possibly one of the great playbooks in that realm is, for example, Singapore, which I suppose in one sense is the topographical opposite of Saudi Arabia, because it's basically a huge swamp. And at the same time, it's very small, whereas Saudi Arabia is quite a large geography. It just happens to be very heavily in desert. But if you look at the ways that those sorts of long-term organizations and the way that the Singaporeans molded a capitalism that suited their state, it's quite fascinating. And I think one of the things, though, strikes me is in conversation, you know, a lot of people complain about, for example, sexism in our business, in the exchange industry. And they say, oh, well, you know, there's so few women chairmen of exchanges and things like this. And I had a great conversation just the other month because I mentioned Saudi Tadawul, and they said, don't be ridiculous. I've just Googled it. Of course, Saudi Tadawul doesn't have a female chairman. And I was able to say, no, because actually you missed the lady's term because she stood down a few months back. And I think that's the sort of thing that people don't readily realize, is that the Saudi economy is encompassing all citizens and all people, which is a very, very significant leap forward compared to what are actually, let's face it, more like the stereotypes we get from Hergé's books written about Tintin in the Middle East 70, 80, 100 years ago.
Exactly, and I think it's amazing because you realize that when you're coming from a Western culture like me, looking at what's going on here, you realize how much we have been modeled and molded on the history of Europe. Yeah. So, for example, we Europeans hate, because of the history of fingerprints. They hate to be classified. They hate to be tracked in a way. That's the word they would use. Here, in the region, people are more than happy to provide all kinds of fingerprints and make sure that you know where they are, what they're doing. And that's a completely different perception. Similarly, we have labor laws which are very complex in Europe. I guess it comes from the 19th century, where people working in mines and were exploited. if you look at the labor laws here, they are protective, but they don't have that complexity we built over time in Europe, because they never worked in mines. They never had this situation where an employer was just over-exploiting the people. So it's amazing how we have these differences that you realize when you come in and you say, why do we behave this way in Europe? Behave this way because we had our own history. And another example, for example, we talk about salary or compensation difference between men and women in Europe as an important problem. But here it's not the case. Here it's the case that they have a very strict way of, determining compensation based on the position, especially on all government or government-related entities. Mm-hmm. And then it's not a single difference between men and women.
Right.
Quite an amazing thing, because they don't have this situation.
That's so interesting when you think about it. So interesting altogether. So, this incredible journey that ends in this amazing desert kingdom, in this pulsating city of Riyadh. Now, where does it start? If I remember correctly, you were educated, I think, at the Sorbonne. Certainly, you went to one of the Grandes Écoles in France.
I was educated in first, actually, I was born and raised in Egypt, and then went to the university in France. A mixed culture between Egyptian and French. And actually, then I worked in the exchange. Was probably my second job, working in the exchange. At the time, it used to be a floor. Mm-hmm. In 1986, if you remember well, there was the Big Bang in London.
Yes.
The continent started to also adopt the electronic trading, and that's where I started my career. So I helped at that time moving from pure floor-based trading to computerized trading. That's really something which was quite training for me in understanding all the economics and all the models of what had been the exchanges in Europe. So based on this and all the integration that took place later on with the derivatives exchanges, then we had the euro and the integration between the European exchanges, as you mentioned earlier, the integration of the 4 exchanges, the French, the Belgium, the Dutch, and the Portuguese on single platforms, which means quite an interesting challenge at that time. I'm still wondering if something like this would ever happen now in Europe, because of all the tensions and willing competition, I would say, between countries and between capital markets, even though they are under one global regulation, which is MiFID, and all one single type of regulatory framework and single currency. So the convergence is coming out of competition in Europe, actually.
Yes, that's quite fascinating. Sorry, it's fascinating. You see how Europe got so far, and then at the same time, the sheer breadth and expanse of Europe is now leading to the problems of a capital market union, because there's one at the very top, they have one view, at the very bottom, they have a different view, and in the middle, they have about 10 views of how they want to do things. It's quite incredible. And that must have been incredible, because when you started, that was when you started, that was kind of originally in the 80s, that was before even the headquarters moved to Rue Cambon. You were still in the Place de la Bourse, which is the most magnificent building, truly incredible building with floors altogether.
Yeah, and there was still physical delivery of certificates and cash. And I don't know if you know this small story, but you know that under this palace of the Palais Brongniart, actually there was a tunnel to the French central bank, the Banque de France, to protect people delivering the cash. Instead of going out in the street, they would just go and use this tunnel to deliver the cash. But the physical certificates would be delivered in a special room that was on air every day in the afternoon. There were people who come and deliver the certificate, the shares, physical shares.
That's quite incredible. It doesn't surprise me, actually, because I remember in the late, when I started, which was 1987, I can remember at that stage still the number of messengers who all got paid nothing and would be handed millions of dollars worth of bearer bonds, and were none the wiser when they were being paid literally pennies per hour, prorated to the face value of the coupons they were carrying, and their job was exactly that, to carry to the Bank of England or to carry to the stock exchange or somewhere. It's quite incredible. I did not realize that the Palais Brongniart had a direct tunnel to the Banque de France. That is amazing, because it's not a short distance either. Let's face it. I mean, it's not right next door, far from it.
No, it's not next door, but it's a kind of like a long. It's one street straightforward, basically.
Yes. When you go straight through, it's a good, but it's a good street. I mean, it's a decent distance. It's not just it's not just one of these. It's not like your average underground car park where you go out one side and up the other. But that's incredible story altogether.
Yeah.
So obviously, I mean, you were there for some very, very revolutionary times in the Paris Stock Exchange. You saw what was going on. You saw the change. There was this whole revolution by the creation of Euronext under the late great Jean-François Tadawul, and you worked very, very closely with him for many years. Then it must have been such an interesting period for Euronext's development.
It was very interesting, actually, because you could see this intention of the founders of Euronext, which was Olivier Lefebvre, Theodore, and George Muller, to realizing actually that these exchanges were too small to survive independently, even including the French exchange, in front of the competition coming over and in front of this integration coming in with a single currency. So they had this vision of trying to integrate those exchanges. But I think this vision was based on collaboration, I would say. The model was not expecting competition. The model was, let's integrate the small exchanges, but we will not have competition on our own securities. It's about integrating infrastructures. I used to have this conversation many times with Jean-François at that time to say, it works well as long as you don't have internal competition. As long as you don't have what happened in 2007, which is the MiFID regulation being implemented. And then suddenly all the exchanges, instead of trying to collaborate and integrate, had to face competition. Yeah. And it's not a bad thing. I'm just saying that it changed the paradigm. Yeah. And then you have to defend your more own market share with a different approach. So instead of, I would say, integrating clearing houses to have one single clearing house across Europe or one clear CSD, etc., we had to have basically then competing, verticalizing the activities to protect your business, actually. So nothing wrong. It's just that you had to change the approach and focus on competition. And I would think, unfortunately, Europe, the regulation in Europe was just MiFID launched competition on the trading, forgetting the post-trade. Yeah. That's why it's a mess.
Well, and I think also what happened was, and this actually, I mean, a lot of people are very brutal here, but I actually totally understand the humanity of what went on, which was that if I was the regulator in country A and my stock market became part of Euronext, then suddenly my whole leverage was to become part of, as I always say, the world's most exclusive golf club, which is that group of Euronext regulators who meet every year, who were allegedly ecstatic when the exchange when Euronext bought the Irish Stock Exchange a few years ago, because it quadrupled the number of world-class venues they had to go and play golf on. But it's very difficult because you've got this human natural instinct and also the instinct of the bureaucracy, which is not to give anything up. So therefore, how can you honestly expect, and I'm trying very, very hard not to name any particular nation here, because it's actually all of them in these circumstances. Why would they give up? Because at the first time when they give ground on anything, all they see is their superannuation flying in front of them, their incredible gilded pension, and no one's going to do that. And that's a very, very difficult thing to rationalize. So we end up with all of these sort of not horrible, but kind of ridiculous processes. I mean, ETFs literally having to trade. If you traded the ETF in country A of Euronext, it had to trade on one server. If it traded on country B server, it traded on country B, which is so confusing and just unnecessary in the capitalist logic of it. Let's get that with the market logic.
And I think you're totally right in the sense that a lot of the regulators and a lot of the bureaucracy didn't want to look at the things differently. Yeah, and you look at the right points. I remember a conversation I had in Europe at that time to say, okay, we have cross-listed securities between France and Holland. Where if you want, do we have to keep two order books for the same security while we are on the same platform, or shall we combine it? And the answer of most of the regulators was like, no, if you have listed a security with me, I have to have my own order book. I do not dissociate listing from trading. This is just a narrow view of the things. It had to change with the MiFID.
Yeah.
It could be a listing entity without trading it, but they resisted the idea of dissociating listing from trading.
Yes, and that was the point where, you know, if you were in the drinks business or something, if we look at the success of LVMH, I mean, they were able to go out there and buy all these different perfume brands, and then they kept a French tone to the French perfumes and Italian tone to Italian perfumes, but actually they were genius because they make the bottles locally, they produce the perfume locally, which not a lot of people understand, etc. But the core recipe stays in wherever that would have been in, you know, in the center of the appropriate city in Milan or Rome or Paris or wherever. And that was something we just couldn't do with the stock exchanges, which obviously made the Euronext experiment very difficult. And then you were there for this incredible transatlantic experiment. So how was that? I mean, NYSE Euronext. So effectively Euronext and NYSE combined, and they had a ultimately not altogether happy marriage, but certainly a very eventful marriage. It was a little bit like one of Elizabeth Taylor's, I think.
I think the reason why there was a wave of combination between the US and European markets. I mean, I remember at the same time NASDAQ bought OM, and then they started to have this expansion of US exchanges across the world. And at the same time that we had this combination with NYSE also acquired an exchange in India, portion of the exchange in India. All this, I think, was the real perception that US markets were going to be under pressure.
Yeah.
They remember they started to allow the multiple trading of the same security across exchanges, no more monopolies on the trading between NASDAQ and NYSE mainly. Yep. So they realized that their franchise in a way that would be attacked, and that's why they went across the world. Now, this was, and I think again, the idea was a good one, even though it was very complicated to implement because the cross recognition between US and Europe in terms of listings is a very complex element. It ended up in being done in one way. So European regulator do recognize any American company which had applied and is recognized by the SEC could apply and be listed in Euronext, and I guess in all Europe in a way. But the opposite didn't never happen because actually we were caught by the crisis in 2007, in 2008. Then the regulator said, look, we have other important things to deal with than your cross recognition between US and Europe of the listing to allow companies to cross list. But I think this was the origin at the same time of the expansion, but then also at the same time realizing that when you have a crisis like 2007 and 2008, it became quite hard for, I would say, to sell the story of globalizing markets. Yeah. Everyone went back to clean up its own markets, its own country, its own capital markets, actually.
Yeah, and in fact, actually, we had sort of two shocks like that. I mean, also there was the whole aftermath of the dot-com bubble around about 2000, 2001, 2002, which arguably actually worked quite well for Euronext because it allowed yourself, Jean-Francois, to make your very audacious bid for the Life Exchange in London when that fell loose because their private equity backers in Battery were very, very keen to release whatever capital they could possibly get, which obviously became an opportunity. But we did see the regulators go backwards. Undoubtedly, they all decided they had to stay at home. Again, it's the same thing. They see their superannuation flashing in front of their eyes at the last minute before death. I mean, it's a stress for them, whatever they do. So you know, fascinating tale. So you see Euronext through NYSE Euronext then goes in a different direction. It's taken over by Intercontinental Exchange. They decide to go back to essentially keeping their European assets, which was Life tied in with the IPE, but they let Euronext float off into its own world. And at that point in time as well, you departed and you start on this very interesting and exciting new odyssey. So how did you come to reach the pulsating capital of Riyadh, Roland?
Actually, there was a proposal to work on as an advisor to the exchange at that time. Knowing that actually, even though it was the largest exchange in the region, but this was quite a stable environment, no changes, no willingness actually to open up the market at the time. It was just more like advising on eventually giving the external view on the different products they had. At that time, the exchange had 30 members. They had 180 listed securities, no foreign investors allowed to trade, no data center, no fixed income, no clearinghouse, pre-validation T+0. And I can explain the details of this, but actually it was a limited scope. And like most of the exchanges in the region, the exchange is seen as a way of distributing wealth. Remember, again, the most of the companies, at least the larger ones, have been created with the help of the sovereign fund. It's true in all the region. So the largest companies, the government, when they want to give up part of the wealth back to the local population, what's the best way to do it? Is just to do it through the exchange. You allow only the local investors to apply for an IPO. You do the IPO at the nominal share price, and next day share price goes up. They sell, they're rich, they're happy. Most of the exchanges used to work this way in the region.
Yeah.
And including when I was there for the beginning, for 2 years, it's continued to work this way. It started to change when they realized that they should open the market to foreign investors.
Mm-hmm.
And then you say, okay, why should I just give the same distribution of wealth to foreign investors? I should then have a proper book building, proper pricing of the assets, and not just the nominal price. And this took place actually in 2016, 17. They reviewed the IPO process, and that obviously attracted more of the foreign banks, investment banks, American investment banks, to participate in IPOs.
Mm-hmm.
That was also part of the overall vision to open up the market to foreign investors, not to give the asset to foreign investors, but to make sure that they will bring an inflow of capital. Because they realize that even if they have very wealthy sovereign funds, with all the ambitions behind it, it's better to have also capital joining, which is the perception of the foreign investors and the foreign people is to say, oh, this region is capital rich, so they should export their capital. Yes, they are capital rich, but they don't want to export capital. They are happy to have the flow of capital on both sides, but not to say I'm just an export of capital region. I want to attract capital. I want to have the capital invested in economic activities to develop the kingdom. That's usually a perception. Everyone comes in and says, "Oh, you have let's have an IPO in your market so I can get cash, or let me issue a bond if possible so I can get cash." But they have no intention sometimes to develop any activity.
Yeah.
They're very cautious to say, "Okay, yes, there is no currency control. Yes, there is no limitation transferring capital in and out." But they are very cautious of any initiatives if it provides additional capital to the kingdom. That's the perception when they want to open up the capital markets, is to attract capital, even though they know capital outflow will exist.
Right. But at the same time, also, of course, the difference is this big shift towards the internationalization, if I can call it that, of Saudi Arabia, and also actually a broader Middle East. Because if we look back to, pretty much when we were children, I mean, you had Beirut and Lebanon and a few other nations, but really it was not a very, very internationally oriented Middle East, let's put it that way. Whereas it has become so much so now, and with the UAE having led over the course of the period from, say, the late 90s through the mid 2000s, through 2005, 2010. And then subsequently Saudi Arabia really emerging to come into the lead. It's a totally different paradigm, because the Middle East is really, really excited. I mean, all of that central series of Arab nations are very much more oriented towards foreign capital and towards international business, as opposed to before it was foreign skills satisfying domestic want. Let's put it that way.
Yeah, it's a very, very important point you're mentioning here. Is that actually the region has, there are two types: the small countries, which have a small population in a way.
Yeah.
And so they are capital rich and a small population. So in a way, they can sustain a longer period of time where they satisfy the needs of the local population and grow slowly. But on the other side, you have a country like Saudi Arabia, 35 million people.
Yeah.
They don't have the same economics as the UAE or Kuwait or the other countries. They have to have a real economy. you have the three classes. You have the very rich people, you have the middle class, you have the lower class, poor people. It's not, Saudi Arabia is not just like only wealthy people. So we also have this perception because of the UAE. It's like the UAE is less than 1 million people. Qatar is 300,000 people. So it's a different story when you have 35 million people. You have to give them a job. That has been one of the key elements. Whenever there is any initiative, it's all about, does it create jobs for the Saudi Arabian?
Yes.
They want to employ as much as possible people to make sure that they have a proper job and they can fulfill their needs in the longer term. Right?
Yeah, and that's such a difference. Yeah, I mean, that's such a difference, as you say, particularly to the extreme example of somewhere like Qatar, which is relatively speaking, every person is born with a billion therms of gas in their mouth rather than a silver spoon as such, because of the amount of reserves they have per head of population. So it doesn't drive the same need for the domestic economy. So the economy is developing very rapidly. But I mean, the exchange itself, the development has been absolutely incredible. And actually, we touched upon that at the start of the conversation, because I mentioned alone the fact that you're on the board of Tadawul, which has undergone a revolutionary change, as you've already mentioned. You've touched upon it. I mean, the creation of Edaa, the modern Edaa CSD, is a huge leap forward. And the creation of the Muqassa CCP to really be a state-of-the-art CCP is a very, very exciting project.
Mm-hmm. Yeah, so the current structure it's a group structure.
Mm-hmm.
So there's a holding company, the Saudi Tadawul Group, which owns the 4 subsidiaries: the exchange, the clearinghouse, the CSD, and the innovation company. The reason why it has been created this way is to give the freedom to these entities to focus on their business, and at the same time to be able to expand regionally and globally. So this was done 4 years ago with this clear objective in mind. We don't want to have a limited scope. We want to be a global financial hub. And this has been part of the message for a long time, to say, develop the capital markets. And the sovereign fund many times has insisted to say, we will bring our subsidiaries or the companies we have invested in, we will bring them to the market. The listing is something we will push forward. And they do. But they don't do it because they want to cash in. They just want to encourage people to the different sectors to come to the market and also have the market discipline. So they sell a minority, they can sell up to 40%, which they have done for the exchange. The exchange itself has been listed. And the sovereign fund, which was the 100% owner before, sold 30% initially, then added 10% more. But for them, it's quite simple to say, that's not the objective of the exchange to be a listed place. We are bringing the companies. Go and search for more companies from the outside. Develop the capital markets in a different way. Bring new products, bring new members, bring new capital flow. But don't satisfy yourself as an exchange, as a management team, in saying you are happy because you have listed companies. This is much bigger than that. So this push to modernize the exchange came from the fact that, as I said earlier, the exchange was a closed market for local investors. And you will understand it very easily. It's a pre-validated market. Before you buy, they check that you have the cash. Before you sell, they check that you have the securities. So there is no risk in the whole system. So everything is settled real time, T+0.
Yep.
But that works when you're a closed market. Once you have foreign investors or you want to attract them, let's say you're an American fund, you're in the US, and you want to buy Saudi securities, they would tell you, oh, please transfer the cash before buying. And you say, how much? Oh, we don't know. We don't know at what price is going to be traded. So all this is something that very sensitive for the international investors. They don't want to put up cash before getting the delivery of the securities. All this basically forced the move from T+0 to T+2. It forced also the creation of a clearinghouse to guarantee the trades in those 2 days. So and all this has been remarkably aligned in the sense that it went very quick, because the regulator, the Minister of Finance, the exchange, they listen to what the international investors want. So they had many meetings with international investors that said, we want to open up the market, tell us what we need to do. And the answer was, get the MSCI classification as an emerging market, develop your clearinghouse and make sure that we don't pay upfront or we have the level of protection, and we do delivery versus payment. Make sure that you have borrowing and lending securities. Make sure that you have institutions which are independent and capable of handling international links. All this was a plan defined, and like what we have seen in Europe and other markets in the world, no one was resisting it. So the regulator was on a regular basis, when I say regular basis, monthly meetings with the regulator, the exchange and Minister of Finance, to follow up the execution of this plan. When do you have the clearinghouse? When do you deliver the mechanism of a group structure? When do you have more IPOs? When do you do the Aramco IPO? As you may know, the Aramco IPO was many times debated, should it be only in Saudi Arabia or on an international basis? And obviously we demonstrated to the governments, the royal court, we can do it, we can handle it, not just technically, but we claim that international investors will come because we opened the door for them to open accounts and seamlessly trade, which happened actually. That's why it's guided top down, and the objective is defined. The execution is followed by the main infrastructure, regulator, exchange, Minister of Finance, the different ministries, and executed coordinately, which is quite unique actually. When you know that in other capitalistic markets, it's a different story. I mean, people are competing actually. It's the invisible hand that should lead everyone to the right direction. Here, it's not an invisible hand. It's a visible hand.
It's a visible hand. And I think actually you raise a great point, because one of the things I've always said, and one of the things I learned in the course of the last 25 years of sort of capital market revolution at all, is really how important government is in the background. And I don't mean because government has to pay you money, subsidize you, whatever, but you need to have a benevolent regulatory system that is actually signed on to markets being a good idea. I mean, for example, we can look at somewhere like SEBI in India, where they have fantastic intentions, but they're still linked to a Nehru-esque 1950s Hindu rate of growth concept, which can be difficult in a modern marketplace, let's put it that way. And there are many other instances, you've touched upon them even in Europe, where self-interest can be a problem. And I think one of the great things that's really been pushed forward very, very well in the Saudi economy is by explaining that each person has their role, but it's symbiotic for everybody to move forward. Whereas one of the challenges in a lot of Western markets is the fact that it seems as if certain parties, particularly regulators, feel as if they're not doing their job unless they're actually sort of throwing large logs on the track to stop the train from moving forward some of the time, rather than actually saying, well, now, how do we build a safer train track that we can all get on and we can all be happy taking a bullet train on or whatever? It's quite fascinating. We've got a fantastic intervention here from Jonathan Cowan. Jonathan Cowan, great to see, great to join today. Always interested. Thank you very much, Jonathan. It's lovely to see you. Now, Jonathan is asking a question. I'm going to come back to it in a minute, but I will mention it now. Hi, Roland. What is your view on current and future market trends focusing on trade and post-trade value chain? I want you to think about that for just a second, because actually I'm going to leap into outer space and give you a moment to rest from you've been talking non-stop for the course of the last, 40 minutes. My goodness, Ron. So let's talk about space, ladies and gentlemen. This very interesting meeting took place again this week in the City of London. They're talking about the future of space markets. I'm particularly interested in the role of space exchanges in terms of what's going on. And actually, we produced a little mini video that you might be interested in. It's on our TikTok, our Instagram, and all of our short video feeds, including YouTube. But here you go. You can have a little watch of it right now. It's only going to take up the next 66 seconds of your life.
Space finance, a new frontier for financial innovation. Space finance is in its infancy. Perhaps the best way to gain an idea of potential is from a classic video game. Sid Meier's Alpha Centauri showed a generation of gamers how to exploit the space elevator, nuclear fusion, and orbital solar power, to name but three enormous opportunities. With rapid growth in private satellite launch, there are huge openings in infrastructure, both on Earth and in orbit. From satellite insurance to funding exploration and mining via space junk bonds, through countless opportunities for new energy sources. And let's not forget space tourism. There is a genuine infinity of opportunity in the universe above our Earth. And of course, in an infinite universe, that means a lot of data to crunch as well. The challenge of building the markets of space begins now. The opportunity spreads to infinity and beyond. My name is Patrick L. Young, ready to build the orbital markets of the future, which are out of this world.
Now, of course, when we're talking about technology, one of the other things obviously has been, we've seen this incredible advancement through the 19th to the 21st century. At the epicenter of that has been, well, amongst others, the car company most famously associated with the invention of the internal combustion automobile, Daimler-Benz. And that brings us elegantly to our book of the week, Taken for a Ride. It's an older tome. It was out actually about 20 years ago, but actually it's quite ironic today because I can well remember distributing copies to, amongst others, the chairman of the then Life at the point in time when Life was up for auction. We were discussing the politics of the Deutsche Börse and the politics of Euronext, amongst others. And of course, as we've just been chatting with Roland, it was ultimately Euronext which won the day in the bid for the Life Exchange, which is now, of course, part of the Intercontinental Exchange empire. Taken for a Ride is absolutely sensational. It's a great read. It reads like a novel, but it has huge business lessons throughout. And that's why I thoroughly recommend you pick this up as our book of the week this week. Taken for a Ride, it's the story of the Daimler-Chrysler merger, a merger which ended pretty badly all round. Of course, Chrysler now being part of Stellantis, the Fiat group. Well worth a read. Anytime you get a chance, try and pick up a copy of this book. It's really, really good. If you'd like to know what's going to be our next book of the week, then sign up for our free EI Weekend newsletter. You can catch up with that. You can sign on for it at exchangeinvest.com. While you're there, do please take a free trial. We're offering 1 week free trials these days to exchangeinvest.com, the bulletin of the Bourse business. No serious person in the exchange industry can afford to be without the water cooler of the exchange marketplace. That's Exchange Invest, ladies and gentlemen. Now, let's go back to our conversation today with Roland. We're talking about modernizing Tadawul, modernizing the Saudi financial markets infrastructure, indeed the modernization of Saudi Arabia as a whole. So we have 2 questions coming up. Let's go first of all back to this question from Jonathan. So Jonathan Cowan was asking us, and I have just had, there we go, there's a question on screen. Hi, Roland, what is your view on current and future market trends, focusing on trade and post-trade value chain?
Okay, so the current situation is the following. So the market has around 300 instruments traded, to around 250 equities, then you have ETFs, and you have real estate REITs, etc. Now, the objective of when I say the objective, it's not just the exchange independently. The objective of the regulator, the objective of the Minister of Finance, the objective of the higher authority of the Royal Court is to diversify the market in terms of assets available for investors to trade. Now, this is a big statement, but actually it's translated in the following way. We are trying to attract more companies, not just domestically. Most of the subsidiaries of the sovereign fund will be listed, but equally we are developing a junior market, and we have developed it already to attract private companies, junior companies, and they are coming in with the objective, actually quite unique, to move then to the main market. But actually also cross listings is an important element. But the regulators and the authorities are very cautious about this. Remember, we are not Europe. There are many countries, independent regulators, independent exchanges. There isn't a single currency in the region, but there are still, all the currencies are pegged to the dollar, and they're very stable to each other. But there's no cross-listing, no cross-membership at this stage. It's very the beginning. In terms of trends on the trading side, it's clear that the objective for us is to attract more of the listed companies, which are already listed somewhere else, that would like to enjoy the liquidity and the listing on the Saudi Tadawul market. Now, we are focusing right now on the GCC, on the region. Why? Because the regulators, the framework of the markets is the same, more or less the same. The regulator have a common structure where they exchange views and discuss, but not a common regulation. So the trend, in my view, would be that these will have more and more cross listings, and down the road, we will probably going to start allow companies not based in Saudi Arabia to list in Saudi Arabia and not listed elsewhere. We have many demand for companies willing to list here instead of their home market. But actually, as you know, this is a very complex matter, especially if you don't have another regulator on whom you can rely to enforce your regulation. So 2 steps mostly on the listing side: cross-listing of companies listed elsewhere already, and down the road listing of companies which are not listed in the home market. New asset classes to be created, but asset classes that provide value for investors, not, I would say, quote unquote, speculation. So for example, when we have created derivatives, we have created in index futures, we have created single stock options. Now, the objective is has been the facilitating hedging. When you look at the asset management industry in Saudi Arabia, it's a nascent one. They're not used to hedge. When I say the asset management industry, the one which is guided and towards the local investors. I'm not talking about the sovereign fund investing in Europe or the US. They use then completely different techniques and different approaches. But if you look at the Saudi capital market, the level of sophistication is still at the very initial level. So we develop derivatives, but the usage of derivatives will take time for them to be able to understand why hedging, why providing alternative trading strategies, and how to differentiate between themselves in terms of asset managers. On the other side, we have a market which is 80% retail. 80% volume traded are coming out from retail, which creates a huge amount of liquidity in the markets. And at the same time, it's a very active market and very interesting market for high frequency traders. This actually forced us in a way to move on and allow this type of trading to take place. Especially now that we have a clearinghouse, it's obvious that they can net the trades and have much more efficiency than settling every single trade individually. We have created a co-location space, and they're fully booked already by most of the participants and still need expansion. Because of 80% volume being traded by retail is a very interesting component. So now if you look at the post-trade side, we have a clearinghouse and we have the CSD. If you have the strategic ambition to develop as a regional hub, you have to connect to other trading centers. When I say connect to other trading centers, it means connecting, for example, CSD to CSD. Allow the DR banks to operate if you want to have securities of other markets to be traded on this market. All these elements are going to take place. All the facilities that we know around post-trade, borrowing and lending of securities, short selling, these things are developing. The regulation is in place, but the market is not yet used to these techniques. People, they have assets, they don't lend them because they don't know how to lend, they don't know how to operate, they don't know how to find a counterpart. Not all of them. We have international investment banks which are there and they're using their European and American techniques to operate, but the local participants are picking up. And that's a very important point. They don't want to open the door to anyone to open up the market to foreign investment banks and brokers to take advantage of the market without developing the local knowledge and expertise. They open the competition to force the local participants to participate. I'll give an example of the ETFs. We have had ETFs since 2010, 3 ETFs, mostly on all of them on the local securities. The volumes were not active, very, very low volumes. They started to have ETFs on non-domestic assets, ETF on gold, ETFs on American Islamic securities, on indices of MSCI and Islamic American securities. Then the volumes started to pick up. We have seen ETFs on fixed income, volumes are picking up. And we have seen 1 or 2 brokers starting to develop a team dedicated to create ETFs, which was not the case before. And that's really the push by the regulator, by the exchange, by the Minister of Finance to say, creating some level of competition, but not to the point of destroying the local industry, but to the point of helping the industry to move. And they're very cautious on this approach, actually. Another example, we don't have, I mean, surprisingly, and maybe it's part of the answer to the question, we don't have OTC trading.
Right.
Every single investor have an account in the CSD. Every change of ownership should take place through either the trading platform or the exchange. And we have negotiated deal, obviously, but still going through the exchange. And then, or alternatives like inheritance or court issue that you can change the ownership. So it's a very transparent market, very transparent, fully centralized, and at the same time, it's something we know that down the road may have to change. But for now, it has helped develop this capital market to develop. And they have no intention to destroy that. Their intention is, okay, let's have more and more volumes, more and more asset classes, more and more diversification. But they're not geared to say, oh, an exchange is here, so it's a monopoly, so we should change it and have competition. They want to develop all the services, make sure the industry is up and running properly before creating competition down the road, I'm sure.
That's a fascinating answer. And actually, on a macro point, moving on from this, we've got a very, very interesting question. It's coming from Turkey Al-Taibi. I hope I've pronounced that correctly, Turkey. He's asking, does Tadawul intend to go the route of Euronext and begin unifying the region into one hub? And he's asking from a very key perspective, of course, after your recent deal where you've invested heavily into DME, the Dubai Mercantile Exchange, to make that the Gulf Mercantile Exchange.
It's an interesting question, but I will refer to the history we know. I think in unifying a market, and especially if you look at the history of Euronext and Europe, remember you have the way Eurex and the German exchange. They're not trying to integrate, they're not trying to collaborate, they're not trying to become a hub. They want to become the hub by just trading the securities of everyone else. That's one approach. Because you're big and you think that you can do, they are trading the derivatives of Europe. They have not tried to collaborate with the rest of the derivatives exchanges. And you have the approach with Euronext, which is aggregating in many ways, like NASDAQ, other exchanges respecting the fact that they have their own securities, their own infrastructure, and trying to shape a collaboration, cooperation approach. I think at this stage in the region, we don't have, as I said earlier, we don't have a single European regulation style. And we don't have, I would say, we have an imbalance, which have the Saudi Tadawul Group represent 80% of the volumes of the region. So it's a substantial, if not the very, very large exchange. Now, the other ones, even if you say try to trade their securities, a lot of difficulties because there is no cross-listing active, there is no cross-links so much. So I would say the intention to become a regional hub, yes. But I would say, are we not already the regional hub? Are we not already the largest exchange in the region? Is it not, I would say, not a low level of ambition to try to be the regional hub? I mean, many conversations I had with some people in the country, in the authorities, will say, but you're already the regional hub. Is this your ambition to be a regional hub? You're already there. Be broader than that. And one of the, I don't know if you read in the press that a few months ago, the Royal Court and the Crown Prince said, I want this exchange to become the number, and capital market to be the number 3 in the world. That should be the ambition, not just the regional hub. And that's why we have this diversification in the Gulf Mercantile Exchange. The Gulf Mercantile Exchange is about commodities.
Yeah.
The kingdom, everyone sees the region oil is only oil. That's not true. The country has many, many mining opportunities. They have gold. They have a lot of even rare metals. Imagine the water desalination plants are the largest in the world are here in Saudi Arabia.
Mm-hmm.
Pricing of water, trading derivatives on commodities, pricing the commodities from the point of production more than the point of consumption. I know it's a big challenge, it's a big point of conversation, discussion, but that should be the ambition. That's probably what's behind these moves. Instead of just trying to say, okay, let's acquire the other exchanges in the region, because again, these are independent countries, like you're acquiring the airlines of another country, it's not easy, and it will not be easy to integrate in a way. So the question is, we are the regional hub. We will expand by connecting. We will expand by listing the assets of the others if they wish to, or if the companies are willing to come. But we are not in a model of trying to collaborate like Euronext, of integrating them, because there is nothing like your MiFID or the single currency which is pushing it to happen.
Yeah.
Europe integrated because of the single currency and the MiFID.
And MiFID and so on. Yeah, and I think also the point you make very strongly is the fact that with 80% of the market at the moment, you don't have the same push, because obviously, as you say, the problem for Euronext was that while Paribas was a significant major player in the European capital market, it was nonetheless a minority player, and they're being able to roll that against power. But initially, Amsterdam and Brussels made really quite a difference, and I think that's something that's quite key. And it's also interesting listening to your remarks and thinking about, my daily news source, the South China Morning Post, which has been very excited recently because, of course, we know that Tadawul is going to Hong Kong to do a roadshow soon with the Hong Kong exchanges, which goes back to your double listing concept, which I think is a fascinating one. We've got a great question also coming from Suman Chinta. Good evening, Roland. Now that global markets are moving to quicker settlement cycles like T+1, will it affect FII's, financial infrastructure's, activity if Tadawul moves to T+1?
I think the answer to this question, it's an internal debate we have right now. But I think I remember I asked the question to Gensler about why moving to T+1 in the US. And his answer was quite simple. Any lag between the trading and the settlement is a risk. The shorter this lag, less risk in the system. That was as simple as that. So I think the intention is not a bad intention. But I think the problem globally is that you need to synchronize the different markets across the world. Otherwise, there will be some, I'd say, tension in the system, especially on the post-trade side. So would it affect the infrastructure, financial infrastructure institutions activity if we move to T+1? Yes, for sure. Because it means that suddenly you have to collect your cash from your customers in one day instead of two. You have different time zone. If the customer is in California, he will have to transfer cash in one day. That's more complex than 2 days. Now, a single country like the US, which is self-sufficient somehow in terms of capital markets, that's so huge, doesn't matter for them. It doesn't matter for the SEC if they want to reduce the risk in their own system. But they're probably creating tension around them, especially for the US investors trading elsewhere or for the other markets which are not in the same cycle. I would say a country like Canada has definitely so much close to the US and so much liquidity between the two and trading between the two that makes sense to be on T+1. The other markets, I would say we have to look at the impact on the post-trade side. I don't think that the reduced volume is just going to create more tension on the borrowing and lending of securities, on the transfer of collateral between the markets, the speed at which you transfer the collateral between the markets. Remember also the payment systems are not instantaneous. We still have delays in payment systems. How this is going to operate, and if you don't want to distinguish between delivery and the payments.
And that leads us actually
yes, I see an impact, definitely.
Yes, there's definitely an impact. But like everything in life, hashtag it's complicated, as they say these days on social media with Facebook relationship status and much more. So, I mean, Roland, this is just such a pulsatingly interesting discussion. The excitement of what's going on in Saudi Arabia. Unfortunately, we're going to run out of time. So therefore, I'm going to bring things to a conclusion by asking you, Roland Bellegarde, where does the capital market revolution go next?
I think the answer to this is quite, in my view, the world is moving to east. Capital markets are moving to the east. So as you said earlier, we're going to Hong Kong for roadshows. We're going to look at attracting investors from Asia. Why? Because actually, if you look at the world, capital markets world, it's still very dominated by the US capital markets, which are the largest in the world. Europe is coming behind it. And most of what Europe is investing in the rest of the world comes from the US. It's just because the US don't want to invest in it and they have a different time zone. They don't want to take care of their investments across the world. They delegate this somehow to London, and London is the one investing across the world. But I think Asia is developing quickly. There is a rebalancing, I would say, politically, economically, and from a pure financial point of view towards the east. It will take time. It's not going to happen overnight. diversifying the source of capital coming to the kingdom from the west gradually to the east, or rebalancing a portion of it, is quite a good thing. And I would recommend, actually, if you look at it's amazing to see how much of the Southeast Asian and Chinese financial institutions are looking at the Middle East and looking at Saudi Arabia and opening up access and operating brokers here in the Middle East. I mean, I have not seen, I would say, beyond the 6 or 7 American investment banks doing IPOs, looking after IPOs. I've seen 2 Chinese, one already operating Chinese brokerage firm in Saudi Arabia, and not looking for IPOs. They're operating on the capital market for retail, for institutional. So it shows you actually that the East is getting a strong look at what's going on in the Middle East. And that's, in my view, the world is moving, the revolution is going on the East side, which means that we have to actually rebalance, take care of, and see how we can attract more capital coming from the East than just what the West is investing in nowadays in the Middle East.
And I think on that note, it's quite fascinating. In fact, one of the things I always say, which is a great wonder thing to do, is always look around when you arrive at people's airports in foreign climes. And one of the things I note that is very, very interesting is precisely that, Roland, the financialization and the investment from China and other Southeast Asian nations into places like the Middle East, which we are not seeing in the same way when we're in, say, the Western world, or indeed, good grief, the United States of America, where I'm going to be in a couple of days' time. It's a fascinating discussion altogether. I'm sorry, Jonathan Cowan, that we didn't manage to get to all of your points. I appreciate the fact that you have been noting the fact that T+1 is much more difficult in Europe, that you were hoping to discuss more about the commodities hub ambition. I think actually Roland really answered that during the course of the conversation about the global, the Gulf commodity, the Gulf Mercantile Exchange, etc. And you were adding some thoughts about AI technologies being applied on regulators, members, and exchanges for advanced compliance and trading tech surveillance, e.g. digital KYC, AML, or more importantly, what you were looking at in terms of what you're doing at the moment. Fascinating altogether. I'm sorry we don't have more time to discuss it. Hopefully some other day. Ironically and beautifully segued, I really, really appreciate this very, very much, is the fact that you led us elegantly into next week's guest, Roland, as well. You're passing on the torch to I have to say, the most exciting non-exchange platform that's around at the moment, ladies and gentlemen. Blue Ocean, a new market tide. Understand what's going on in not just the American market, but how the American market is being sold to Southeast Asia at the moment. It is a thrilling and very, very exciting discussion. We're going to be coming to that with the former boss of Brute and SVP of NASDAQ, Brian Heintman, who nowadays is the CEO of Blue Ocean. That's going to be a thrilling discussion. If you want to try and understand better what we're talking about here, pop back to the discussion we had with the founder, the owner of Urbana, Tom Caldwell, just a few weeks ago, when he was talking about his investment in Blue Ocean. For now, ladies and gentlemen, it remains for me only to say a huge thank you to our guest, Roland Bellegarde. He's joined us this evening from the pulsating capital of the Kingdom of Saudi Arabia in Riyadh. It's so exciting to see you. I do hope I'll get a chance to actually see you sometime in person in the near future in the Middle East. It'll be absolutely fantastic. Peter N, I do believe that's Peter Niklovich, says, great discussion, gents. So Peter, lovely to hear from you. And thank you to all our commenters, Jonathan Cowan, Turkey, Al Taibe, Suman Chinta. My name is Patrick L. Young. I want to say a huge thank you, particularly as they've worked already pretty much all the way into the time allowed for them for May the 1st. Don't forget, tomorrow it's a day off around multiple places in the world where we can all remember all the people who've died while socialism wasn't working. Ladies and gentlemen, thank you very, very much to our production team of Janella, Fernando, and Marianne. What a seamless show, but above all, our magnificent guest, Roland Bellegarde. I hope we'll have a chance to talk about this more, Roland, as we see Saudi Arabia developing, and who knows what you can do with the Gulf Mercantile Exchange allied to the strength of Tadawul and your various arms of operation. My name is Patrick L. Young. Join us again next week with Brian Heintman. Thank you very much for watching, ladies and gentlemen. This has been IPO-VID. We'll be back tomorrow morning with the water cooler of the Bourse Business, Exchange Invest, delivered to your inbox. Have a great week in life and markets.
Thank you.